Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish and then bearish scenario, as we expect to finish wave Y over here before then continuation to the downside, as this is then a bigger corrective structure in a WXY. Now for the micro scenarios coming up, it is important where this wave X is going to be positioned, either here at the left low or the right low. And I'll explain why, because if we put the wave X on the left low over here, then in this wave Y, we are looking for an expanding flat in a 3-3 and then a 5 wave move to the upside, meaning this has to be an impulsive structure, currently working then on a wave 4, which is already very long in time, for then eventually a wave 5 to the upside to take the liquidity of the double top and also preferably end inside the most common target area for wave Y, which is taken from the low to the high of W to the low of wave X, sitting between 29.6k and 30.1k. And what is nice actually about this target area is that the 0.618 is around the triple top that we have over here, and the 1.236 is in confluence with my blue target box above at 30k to 30.1k. However, if we put this wave X to the right side, then now inside wave X, we are looking for a WXY by itself, meaning a zigzag, zigzag, and then another zigzag to the downside, where then this wave Y has to be a 3-wave structure, where this can only be the first structure, second structure, and then eventually another structure to the upside to end in right about the same target area. If we go to the bearish and then a bullish scenario, then we are looking for a move to the downside. So here we have a count in green or in purple. We either have a WXY or an ABC, meaning a 3-wave structure that is going to be looking like this. In this particular scenario, W or A is finished, and we are now in the middle of wave X or wave B, which is a 3-wave structure to the downside. And now this move down is labeled as a W in a zigzag to the downside. In wave X, we have a complex correction, which then is forced by itself a W zigzag, then an X zigzag, and another zigzag to the upside in a wave Y, hitting the most common target area for a wave Y, taken from the low to the high of W to the low of wave X. And we are now looking for a 3-wave structure to the downside to finish the blue Y. Now the most common target area for this wave Y is between the 1 and the 1.236, which is taken from the high to the low of W to the high of this wave X. And as you can see, it is in confluence with the low that we have of this range. So that is quite important. And if we look at potential wave B or wave X targets, we can take a fib from the low to the high of A or W. And you can see that for a wave B, the most common target area, as well as for a wave X, by the way, if it goes below this low, the most common target area is between the 1.236 and the 1.38, which is sitting between 28.6k and 28.5k. But you can also see that the most common target area over here is below the most common target area for wave Y. So the 105 is also a level we have to keep in mind. The 105 is a more rare target for a wave X or B if this low is taken, and then for a B, an expanding flat in an ABC, or for a wave X, then of course a WXY, where the difference is that in a wave C you expect an impulse to the upside, and in a WXY, where wave X takes the origin of wave W, you're looking for a 3-wave move to the upside. But the targets are quite similar, and a rare target for wave Y is the 1.618, and the 1.618 is in confluence with the most common target area for X and B over here. So there's definitely some interest in this area. I don't really have any target boxes, however, below this low, but nonetheless, I would then be looking for a wick below and then a continuation to the upside. That is the ideal scenario over here, which then leads to some sort of a swing failure pattern trade where you wick below the low, close above, and then look for continuation. And then when trading a swing failure pattern, the closure above is the entry, stop loss below the low, and then you're going to be looking for the highs of the range, because we have double and triple tops going on over there. Of course, no financial advice. You have your own plan, your own strategy. You guys and girls know that we are on YouTube. But this is definitely an area or a scenario that is interesting if price is moving to the downside first without taking that triple top first. In a more bullish scenario, which has a lower probability. We are looking at this to be a wave 1, but because this is an expanding structure, the probabilities of this being a 5-wave move is very low, because an expanding diagonal in a wave 1 is incredibly rare, and then you would be looking for a WXY and now continuation in a bigger wave 3 to the upside. If we then go to the micro scenarios and we zoom into the 15-minute, then I did some counts from this low towards the upside, because as mentioned, it is important to know if this now is an impulsive structure for the potential end of Y and a move to the downside, or if it's more probable for this to be a 3-wave structure and continuation towards the downside. So what we are looking at the moment is a impulsive structure after the double bottom here was taken. So we took the double bottom, took the liquidity, 1, 2, 3, looking for 4, and then a wave 5 to the upside. Now, wave 3 over here is longer than wave 1, so that is good. We have volume increasing in this move to the upside, which is nice as well. But the problem here is a little bit this wave 4 to the downside. So the maximum retracement level for a wave 4 is the 0.5 fib taken from the low of 2 to the high of wave 3, which has been very nicely respected. There's nothing wrong with the 0.5 over here. However, time-wise, this wave 4 is incredibly long. It is 6 times longer than wave 2, which is very, very long and very unusual as well. However, as the true invalidation for a wave 4 is breaking the 0.5 fib, we cannot say it is completely invalidated. Only if price is going to start to close candles below the 0.5, meaning below 29.3k, starts to close candles over here, that is the moment we can say, well, this wave 4 is invalidated, and therefore this impulsive structure on the chart right now is invalidated. If we look towards the upside, then the most common target for wave 5 is between the 1.236 and the 1.618, taken from the high to the low of wave 4, which is in confluence with the triple top that we have at 29.5k, as well as the range high for maybe then a wick above, close below, and continuation to the downside. In the micro bearish scenario, we are labeling this as a zigzag structure. And even though the most common target for wave C is between the 1 and the 1.236, which clearly has been passed, as you can see, a rare target for wave C is the 1.618. And in the past couple of weeks, you could almost say that this is the new common target and these are the rare targets, basically. But this is really the way it is. Now, what is important is the volume on the chart. So if I open the volume, then what you can see as well is that volume at the end of this move over here was increasing. We had some impulsive volume coming in. And this is something that you tend to see in wave Cs and not necessarily wave 3s, because if we are looking at a wave 3, you want to see a 1, 2, 3, then eventually a 4 and a 5. Highest amount of volume, preferably in wave 3, which is most common, and then you have a 4 and then a wave 5, but wave 5 is then on lower volume compared to wave 3. However, over here you can see the highest amount of volume is in the last couple of candles. We never really got a wave 4 and a wave 5 for a new high on lower volume before then a move to the downside, and this is something we tend to see in wave Cs. But if we then zoom in, and this is where it starts to get a little bit confusing maybe, we could have a wave A over here, right, a wave B, and then a 1, 2, 3, 4, 5 in a wave C. Right, so in this scenario, you could have, in the bullish scenario, this is a 1, 2, 3, long 4, 5. But in the ABC scenario here, you can count a 5-wave structure, but then we have an extended wave 5, which is quite rare as well, because this wave 3 is also extended compared to this very small wave 1, and having 2 extended waves is not really something you tend to see. So this is a bit weird in confluence with the other waves that we have on the chart, but just because of the volume as well, we cannot disregard this scenario. And another thing that actually, what I forgot to say, supports potentially more bullish side is that we have the 886. And the 886 is taken from this high to the low, and price hit the 886 on the 15-minute, dropped, wicked back in and dropped once more. Now preferably you only hit it once and move away. The longer you're ranging close towards the 886, the higher the probability for upside. If we look at the CVD divergences, we do have bearish CVD divergences. This is the third time though that this pivot high has a CVD divergence with a lower high. This was the first one. This was the second one, and this is now the third one. And the more often you get one, the lower the probabilities. However, this high over here now created for the first time bearish CVD divergences with the lower high. It is a lower high. It is absolutely minimal, as you can see, only a few dollars difference, but it is a lower high nonetheless. And that is a first CVD divergence where the target would then be this low over here. But also on the more local time frame, we had some bearish CVD divergences when price was moving to the downside, and still have, but now this push to the upside created second or third CVD divergences with this pivot. I'll show you in a second. And we have some bullish CVD divergences going on. So if we then zoom out to the 15-minute, then you can see that over here, if I zoom out completely, high, lower high on price, but you can see the yellow line, it is simply moving up, 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 as well as the blue line, by the way, so bearish CVD divergences, but more locally, lower high on price, higher high on the yellow line CVD, which is the first time that happened with this particular high over here. And more locally, if we zoom in, then you can see on the 5-minute, price moving lower, while CVD was moving higher on blue as well as on yellow. And now, of course, this push to the upside again created bearish CVD divergences. However, with this pivot, we basically already had a 1, 2, maybe even 3 bearish CVD divergences. So then this is like the third or the fourth time that we have CVDs with this high. And the more often you have a CVD divergence with the same pivot, the lower the probability of that playing out. So that is something we keep in mind. So if we then look at the probabilities of the different scenarios, then on the micro, I am pretty neutral, not gonna lie. So it's not easy to really look at the micro and be like, oh, it's bullish or bearish, because in the bullish scenario, well, the problem is the length in time of this wave 4. That is the main thing in this particular scenario. You really want to see continuation to the upside in a wave 5, because a wave 4 that is 6 times longer than a wave 2 is quite rare. And in the bearish scenario, well, the 1.618, it remains a rare target. But looking at the volume, yeah, it does fit with a bearish scenario, and we have some bearish CVD divergences. So yeah, the bearish one looks nice, but the bullish one, as long as the 0.5 is not broken, is also still valid. So that's the reason why the micro is quite neutral. On the low time frame though, I am looking still for that for the highs, the triple top basically, 1, 2, and 3 at least, to be taken, either with this scenario over here, where we first move to the downside, right? If this is a 3-wave structure, then we would be looking for a move to the downside, take the low and up, or looking for this scenario, so the 2 more bearish scenarios, because after this scenario we expect to move to the downside, and also after this scenario, which is still corrective, we also expect after Y of C is in, a move towards the downside. So on the medium time frame, which is one higher, I'm still expecting at least this low to be taken, but also lower prices. If price would do this, go up for Y or C, I still expect another move towards the downside to come. So I hope this video was not too complex, a lot of detail over here. I still hope you found it helpful and valuable. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.